All right, everybody, Brant Phillips with Real Estate Fundamentals. So today I want to talk about the ideal business. What we're really going to be doing is comparing a real estate investing business. I'll probably talk mostly about flipping, for example, compared to some other type of business model you may be looking at, like a franchise, some type of brick and mortar business, right? So let's just compare these real quickly and let you guys determine if real estate is an ideal business, right? If becoming a real estate investor is an ideal business model for you. So the first thing I want to look at is equity, right? So on the real estate investor side, and this is all contingent upon you doing real estate the right way, right? Things that we teach here on the real estate fundamentals, right? There's 7 fundamentals of real estate. If you execute those things the right way, then you're doing it the right way. If you're doing it the wrong way, then obviously I can't help you with that. But one of the benefits to investing as real estate is we get instant equity, right? What do I mean by that? Whenever we buy a piece of real estate, we typically have 25 to 30, sometimes 35, 40% equity in that deal after the development's being done, meaning after our full investment has been made to purchase and renovate that property to add value to it. We have instant equity, 25, 30, 35, 40%, sometimes a little bit less, but typically more, okay? So instant equity, compare that to any other business, any business that you're building from the ground up, compared to, we'll just say, no equity, right? So if you're building some type of brick and mortar type of business, you're starting with negative equity, right? This is like a big minus, okay? When we look at the very first thing, this is a positive to real estate. Instant equity versus no equity, but really probably a lot of debt without any equity at all whatsoever. So that's kind of the first bullet point. So let's talk about leverage. That's one of the beauties of real estate, is being able to use leverage. What I'm basically mean is 100% financing, okay? 100% financing. We buy multiple properties every single month, and we fund these deals with 100% financing from our private lenders. Why do our lenders do that? Number one, because they're not banks, right? Banks just don't do that as a rule, even if there's tons of equity. Why do private lenders fund 100% into our investment deals? One, it's relationship, right? We've been doing this 14, 15 years. We've got a track record of 100% performance on hundreds of deals. And that's great. But number two is because of the equity, right? It's a solid, tangible asset with equity in it. So we're able to get 100% financing on those deals versus, what are you looking at in some other type of business, right? You're looking at cash out of pocket, and it's typically substantial amounts of cash. Look, if you're opening up a restaurant, this could even be like a franchise. If you're opening up a beauty salon, and just on and on and on, et cetera, et cetera, et cetera. So many other types of businesses, especially brick and mortar business these days, just any type of business, you're going to be putting money out of pocket, right? You may be getting some type of small business loan, a SBA loan, but basically you're not really able to leverage like you are in real estate, okay? So I'm gonna say this is a negative, right? This is like a -1. We're scoring things over here. That's a -1. Real estate so far, we've got +1 here. We're winning the battle so far. Okay, so then let's look at advantages versus competition. Okay. Oops, let me see here. I'm just going to say unfair advantages. There's some unfair advantages that we have in real estate. Okay. I don't think a lot of people think about this, and this is one of the reasons why real estate investing is an ideal business model when you execute it properly because of the unfair advantages. What do I mean by that? So let's say that we are flipping a house, right, in a neighborhood, and let's say this neighborhood is a $200,000 ARV, meaning the houses that are selling top of the market are usually about $200,000. So in today's market, let's say that there's 5 houses for sale. It's going to look kind of like a face. All right, there's 5 houses for sale, and let's just say that they're all in the $190,000 to $200,000 price point. Well, whenever we go to invest in this market, right, we're typically buying homes at about 50 cents on the dollar, right? So we'd probably be buying a home in here, granted it needs a lot of repairs, at about $100,000, give or take, depending on the amount of repairs that it needs. So then after we do these repairs, let's say we do $50,000 in repairs, we're on this deal for $150,000. But when we go to price our home, what are we going to be pricing it at, right? So I like to price my home, very, very similar or a little bit less a lot of times, just to get those showings and get a quick sell. Now, at the time of this recording, we're in a hot seller's market, so we're actually pushing price, maybe even going before. But here's the thing, guys. When we go to market, we're very similarly priced, right? Or maybe even priced less than our competition, okay? Our competition, but we're a better product, right? So this is our home, and we're just shining above all the others. Why? Because this is a brand new, fully renovated home, right? New paint, new flooring, new roof, new countertops, everything that we needed to do, we've done it. This is basically a new move-in ready home that's vacant. So people aren't worried about COVID and things like that. Showings, it's very accessible all the time. Compared to our competition, who's our competition? Mom and pops, right? Like families, they've got 2.5 kids, a couple of dogs. There's, who knows what in the backyard. There's Crayola markers on the wall. Little Johnny threw a fit and kicked a hole in the wall. This is our competition, right? We're buying these deals with equity, going in to a marketplace where we've got a better product and we're able to price our product even lower. You can't do this in any other industry. You can't do it in the restaurant industry. You can't do it in electronics industry, right? Everyone has similar costs of goods, costs of services, all those types of things. So this is an unfair advantage for us as real estate investors whenever we go into these neighborhoods and we have a better product that's lower priced, right? You compare that to, all these other industries that you may be in business or thinking about going out of business. Like a lot of advantages, like there's no advantages. What are they? Maybe you have some. Maybe you've got some, USP, some unique selling proposition. You've got something, maybe. If so, great. But the typical, Joe's Burger Shack, like what do you have, right? And so this is also a -1. I'm going to put unfair advantages that we have because we have a better product at a lower price. Once again, real estate investing gets a point here. If you're scoring at home, another point to real estate investing over your typical business model. So let's look at the next thing. Let's talk about risk, right? So there's risks. There are risks, but I'm going to put in real estate, by my assumption and experience, is they're very, very minimal, okay? Why? Because we have, what do we have, right? We have equity, okay? We have equity day one, and then also if you follow the 7 fundamentals, we also have, I'm just going to put MES, multiple exit strategies. So the type of investing that we do, we build an investing model with our deal flow. It starts at deal flow, right? So the leads that are coming to us are properties that we have multiple ways to execute and monetize those deals, whether we flip them, whether we hold them as rental properties, owner finance notes, wholesale them, or even sometimes just list them for the sellers. We're able to monetize these deals in multiple ways, right? We have multiple exit strategies or multiple income strategies from each and every lead in each and every deal that we do when you do it the right way. This doesn't work in the luxury model, right? Like I teach and preach median price housing and below. So we're able to minimize our risk, right? We keep our risk at a minimum. So what's the risk if you're starting up a new business? Okay, if you're starting up a new business, I would say those risks are substantial. And I really only need to bring up one statistic. 9 out of 10 businesses fail. Think about that. 9 out of 10 businesses fail. Need I say more? Like I don't need to even elaborate on that. With 9 out of 10 businesses fail, that's a -1 to your typical startup business. And with a real estate investor, focusing on median price housing and below, every deal that you're looking at, you should theoretically have multiple exit strategies. So this is an easy one for real estate investors. All right. So as entrepreneurs, every deal, every opportunity we look at, we're always looking at risk versus rewards. So let's talk about rewards here, okay? Let's talk about rewards. What are the rewards with real estate investing, okay? Well, there's several that come to mind. We've got short-term rewards, fix and flip, high paydays, things like that, making profits of $20, $30, $40, $50,000 on a single flip that you may have very, very little time investment, right? So we flip multiple properties a year that net $50,000, sometimes 6 figures, that properties that I may not have even seen myself. And I know some small businesses will work the entire year, 78 hours a week, to maybe show a profit of $50,000 or $60,000. Just think about that. So there's obviously some short-term rewards when it comes to real estate investing, where you're flipping or maybe you're just an active agent and you're listing properties. You have very little risk there, but some pretty good rewards, right? Especially if you know how to build out your marketing, as well as wholesaling and things like that. We've got long-term rewards, okay? And now I'm getting more into buying and holding real estate, buying and holding rental properties, buying and holding mobile home parks like we're doing, things like that. You've got long-term rewards. You've got passive income, okay, from your passive investments. For me, it's rental properties, it's owner finance notes, things of that sort. It's our mobile home parks. There's a lot of passive income, even like with eXp Realty, for those of you know are involved in that. If not, hit me up, because that's a big part of my passive income real estate strategy. And then also I would say there's a lot of tax advantages, okay, obviously from the buy and hold model. So those are the rewards with real estate. What are the rewards for starting your own business? Okay, so once again, using that model of, your restaurant, let's talk about like a restaurant owner, right? Like how many restaurants do we dine at? We probably know people who've owned restaurants. I've met a lot of people who've started up restaurants. Most of them have gone out of business. The ones who haven't have they work their tail ends off. It's a really, really, really hard business. What is the reward? What is the upside, right? To make 6 figures or ultimately scale that business. It's a hard business to scale. Any business is really hard to scale, but if you're scaling a brick and mortar model, it's a very, very, very small percentage of people are actually able to execute scaling that business model. So your rewards, I don't know, like a buyout, like a sell, so you're trading massive amounts of your time, massive amounts of risk, headache, going into a game knowing that there's a 90% chance that you're going to fail and exit that model with a big, huge payout. Not very likely. So that's a possibility, right, of a big buyout. There's a possibility that you can fully systematize the business and have it run on autopilot and just kind of like live that life. Good luck with that. There are some tax advantages on being a business owner, of course. Like hopefully you've all read Robert Kiyosaki, Rich Dad Poor Dad, the cash flow quadrant, right? The BI triangle. You need to be reading that kind of stuff if you're a serious entrepreneur. But once again, if you're scoring at home, the reward side of owning a business or a small business in comparison to a real estate investor, I'm giving that once again to a real estate investor with +1. So last thing we're going to talk about, we're going to wrap this up about why real estate is the ideal business. If you could read my handwriting here, going into the last section, is let's just talk about lifestyle, okay? So this word gets thrown around a lot, right? So I'm not saying like you're going to be, living on the beach in flip-flops, 7 days a week and stuff like that. But there's some significant advantages to a real estate investing business that you don't typically have, right? Brick and mortar. Yes, we have an office. We chose to have an office, a physical office. Benefits us on the size and scale of our company. But most investors I know, like they work from home, right? It's virtual. There's low overhead. You can set your hours. You can set it up to, where a VA does a lot of your work. You can basically subcontract, a lot of the work, work that needs to be done. Maybe the marketing, the contracting, just different parts and aspects of the business. Very, very, very virtual, and you can really build this and set it up your own way, right? Like you're not most likely having to unlock a door and open a building at 6 a.m. or 8 a.m. or 9 a.m. Think about these guys who run donut shops or dry cleaners. or a restaurant. These guys are getting there like 4 or 5 in the morning to prep, for breakfast or lunch or even dinner. It's crazy the amount of hours and just the moving parts that are involved in it. So I would say that, real estate investment, a real estate entrepreneur has a lot of advantages to lifestyle design, okay? And you already know where I'm going with this. I'm going to go ahead and give real estate a +1, versus the lifestyle of a small business owner in your typical kind of brick and mortar other type of business. Lifestyle design, there's not a lot of opportunity there. Let's just be honest, there's not a lot of opportunity there. So if you're scoring at home, so I've got -1, 2, 3, 4, 5, 6, -6 to a real estate investing business, which is going to be +6. So no hands down. In my humble opinion, and based on 14 or 15 years of experience now, I would say that real estate investing is an ideal business model when you do it the right way. So I hope you got a lot from that. If you're thinking about taking the plunge, I appreciate your comments, your likes, hit that subscribe button, and we'll talk to you on the next Real Estate Fundamentals.